Hello there. Welcome to Market Call. David Burrows is our guest on the show today. He's President and Chief Investment Strategist at Barometer Capital Management. And David will take your calls, emails, tweets, and video questions on North American large caps. There is that number, 1-855-326-6266. Or send an email to marketcall@bnn.ca. Or we'd love to get questions by Twitter or Facebook message. David, great to see you.
Great to be here.
Give us your take on oil. Are you tempted to pick away at beaten up energy stocks today?
Well, I think that people who know us know that we try to do two things. One is to find industries or sectors or themes where there's a structural shift taking place that benefits the sector and allows it to be revalued. And we try and stay away from the groups that have some kind of structural challenge. And clearly over the last 3 years, 4 years, there's been a fairly significant structural headwind to the energy industry, which doesn't appear to be going away. This work that's being done with fracking in the Permian has created a whole bunch of barrels of oil production, and it's cheap and it's coming readily, and so it's a real headwind for the industry.
We were looking at a chart earlier on the Business News, and it's courtesy of Jason Kirby at Maclean's magazine, and it's pretty stunning. Now, it's a little hard to follow. The scale on the bottom is months.
Yes.
The orange line is the most recent oil slump from a value of 100 way back in 2008.
Yeah.
And it's inflation adjusted. And also then the white line is the slump in the 1980s.
Yes.
Anyway, sorry, the long-winded point I'm making here is that the slump beginning in 1980 took 22 years before it was finally fixed.
So we're all about secular themes. And if you look at the collapse in oil prices in 1985 or 1990-91, both were about 66%.
Okay.
Same if you throw in the bust in tech in 2000 or the bust in financials in 2008-9. Mm-hmm. After 12 or 14 months, you'll get a bounce that lasts 12 or 14 months. That's people looking for their money back, which of course we got into January and February of this year. And in all four of those cases, you had 8 to 10 years of sideways choppy markets, because you have to restructure an industry when it goes through a bust like that. And that just hasn't happened in the energy patch. So we have virtually no energy producer exposure at Barometer, because I just think that fracking is going to continue to bring on more barrels. If you can find it with certainty, you can raise capital, and so it's a tough time to be in the energy industry.
We've been hearing that even with these low oil prices, the U.S. frackers are still attracting investor money.
Well, and they're out there hedging their production going forward, so that's additional selling going on into the market.
What about Cenovus? We had Rafi Tamazian on today, and he said he was disappointed that Cenovus's boss, Brian Ferguson, who's retiring, didn't directly address the pain his shareholders have been through.
It's really tough. I mean, when you have a sector that's having a hard time and you happen to buy assets at the wrong time with a plan to finance it by selling maybe assets later, and it gets worse, it's very, very difficult, and that's what they're sort of facing. And I know they say there's going to be no fire sale, but at the end of the day, it's a tough time to be trying to sell assets.
We are going to take a break, and we're going to be right back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management, and he's answering your questions on North American large caps. Give us a call, 1-855-326-6266.